Good morning, good morning, good morning, good morning, good morning, everyone, and welcome back to the Mango Grove for your daily Bitcoin and market analysis update. And oh my, our cascading pattern that we've been talking about for a couple of weeks now is going really well. This is how it started, and this is how it's going. The big freaking candle. But as you guys know, it's not done yet. This has a much bigger story going on in the background, and we've been talking about that for months now. I know many of you guys have missed the initial entry, and I know the FOMO is strong. I know you guys are just dying to jump in at these prices, but you guys have no idea whether it's the best time to be buying or not. So in this video, I'm going to be doing a complete review, where I'm going to touch on multiple things that we've been talking about for months now. But more importantly, I'm going to be talking about one of the biggest signals that we talked about a couple of weeks ago, right? Actually, this was a month ago. I apologize. A month ago, we talked about the biggest signal, which is the liquidity signal coming in from Dixie, right? I'm going to be giving you guys an update on this one. And hey, a shout out to Beaneater, because he's one of the few people who actually remembered and has been keeping track of the entire story that we've been putting together over the past month or so, right? So I'm going to go ahead and touch on the importance of having a plan and sticking to a plan and not letting your emotions get the better of you, right? Because that's going to be especially important in this current juncture. So let's go ahead and talk about what's going on with Bitcoin, right? We're going to do a quick update on our cascading pattern. I'm not going to spend too much time on this because we spent all of the past 10 days talking about this, right? So what exactly do I mean by the cascading pattern? And I'm going to do a quick explanation for the benefit of those of you who are just joining us over here on the Mango Grove. And hey, hit the subscribe button if you are new, hit the like too, and leave a comment down below if you guys have been enjoying the series, because honestly, what's been keeping me so consistent with these videos has been the comments I've been getting in the comment section. Your feedback has been so freaking motivating. So keep the subscribes, keep the likes coming in, and keep the comments, guys. It means a lot to me. So going back to what we were talking about, what exactly is the cascading pattern? Well, the cascading pattern is when we have a pattern within a pattern that breaks into each other, causing a bigger move, right? So at the moment over here, we have one of my favorite cascading patterns where we have a falling channel, right? A falling channel that usually people look for a falling channel to break towards the upside. But what instead happened was we broke towards the downside. Now, when these downside breaks fail to see continuation, we should be looking out for a consolidation underneath the pattern that broke towards the downside, right? And we put in our scenario, in our current juncture, we put in a perfect ascending triangle, like you can see over here, right? So we had a falling channel with a beautiful ascending triangle right underneath it. And here's the beautiful thing: the measured move of this ascending triangle, the target of this ascending triangle, pointed to a break of the larger falling channel, right? Leading to a bigger move all the way up, potentially to the 200 moving average, right, which is sitting at around $24,000-ish, right? So that is a quick rundown of our cascading pattern. The ascending triangle breaking back into the falling channel, which would lead to a break of the falling channel, leading to the measured move of the falling channel. And the measured move of the falling channel coincidentally points to the 200 moving average. And by the way, guys, it's not really a coincidence. This is how technical analysis and price action works. And in time, as you guys develop more knowledge, more experience, you guys are going to see how beautiful technical analysis is. And this is coming from a guy who was previously a purist in fundamentals. Now, don't get me wrong, guys, I still love my fundamentals, right? That's the basis for my long-term Bitcoin thesis. But technical analysis, it is what allows you to play the mid-term swings, the short-term trades, and more importantly, technical analysis allows you risk management on all time frames, on the longer time frames as well as the lower and mid time frames, right? But risk management comes through TA first, right? It's so hard to risk manage through fundamentals alone. It is almost impossible in my opinion. TA, however, technical analysis allows you to risk manage in all scenarios. So yeah, that's a quick rundown of the cascading pattern. We had a measured move target of around $24,000. However, leading into that move, we had three triggers, right, to activate that pattern, right? The first trigger was a break of the ascending triangle. The next trigger was a break of the 4-day dynamic within the falling channel, and the third trigger was a close above the weekly Tenkin. Now, officially, all three triggers have been activated. So if you guys have been following me on this trade idea, you should have at least 2/3 of your position in, because we had enough time on the first two triggers to get our position in, right? And in fact, let's go ahead and quickly look at the charts for this. I'm going to switch on over to the charts. All right, here we are looking at Bitcoin on the weekly time frame, and you can see our cascading pattern with our ascending triangle over here, the falling channel, etc., right? I'm going to go ahead and zoom in for the first trigger right over here. Okay, this was 2 weeks ago, and back then we said, hey guys, Bitcoin had a very deceivingly bullish candle close, because we closed ever so slightly on the weekly time frame above the horizontal, right? Above the top of the ascending triangle. It was so slight, but if you zoom in, it was significant enough, right? And you can see that the market reacted to it. It came, retested the top of the ascending triangle, and then took off immediately. That was the first trigger, right? Now we'll get back to the chart over here on the weekly time frame, but the second trigger was actually on your 4-day time frame, right? And it was specifically on the 4-day dynamic, because we had pointed out how, hey, the 4-day dynamic has been resistance for the longest time, and the one time we traded against it right over here, this was on the FTX drama, by the way, we had all our triggers activating, but not the 4-day dynamic, right? Which is why, by the way, this time I built into the trade, and the 4-day dynamic was one of our second triggers. Once we got the close about the 4-day dynamic, things got really exciting. That was your second trigger. Now, what was the third trigger? The third trigger is actually back on our weekly time frame, and that was above the weekly Tenkin. In fact, we had said the weekly Tenkin is going to be a guiding light, right? If we get a so trigger 1 was the ascending triangle. Trigger 2 was the claim of the 4-day dynamic. Trigger 3 was the weekly Tenkin. But unlike trigger 1 and trigger 2, trigger 3 closed way above the trigger, right? The weekly Tenkin is sitting all the way at around 19,200, while price currently is sitting at around 20,800, right? So it makes it really difficult to act on trigger 3, right? If you're scaling into your position and adding on each one of the triggers, for example, especially when you take into consideration that we also have weekly resistance right over here. So what do? It becomes really difficult, right? If you don't have your entire position. So for example, at the moment, I am in this position where I have only around 2/3 of my position. Actually, it's more like around 3/4 of my position, because we did have a trigger over the weekend too on the dashboard that allowed me to get a little bit more confident on adding a tad bit more to my trade. However, I don't have my entire position. So what do I do over here, right? Do I simply just add resistance? No, I'm not going to do that, right? There are multiple options that I do have on hand. So for example, you could say, hey, I'm going to simply wait for the retest of the weekly Tenkin to get the rest of my position in. And if I don't get that retest, I'm simply going to do nothing. Option 2 would be to take your position over here, right? But manage your trade based on the lower time frames, right? You got to be very careful though with that, guys, because if you don't have the time to manage your trade on the lower time frames, you should not be simply FOMOing into weekly resistance over here. Okay, because remember, you are now relying on the 4-hour time frame or the 12-hour time frame, depending on which one you pick, to carry this weekly candle past this resistance. Okay. If you don't see that momentum, you need to be able to get out of your trade. And keep in mind, guys, the volatility profile across all the time frames, right? We're looking at the daily at the moment. It's red. It's sitting at red. When I started talking about the cascading pattern, the volatility was sitting at blue single digits, around 4 to 12 volatility. It's sitting at 91 at the moment, right? So you'll be buying daily volatility really high. 12-hour volatility is sitting at 94. 4-hour volatility is coming down, right? Because we're going to consolidation. So this would be your saving grace. You would be trading this based on the 4-hour consolidation, hoping for the 4-hour to see continuation. So based on the 4-hour time frame, you could see continuation over here, especially since we do have potential bullish divergence showing up as a trigger on the 4-hour. We also have the bullish Ichimoku call over here. But again, guys, if you're trading this on the 4-hour time frame, you have to manage it, right? don't simply let the trade go ugly on you, because higher time frame trend is going in your favor, yes, but volatility is pretty high. It's a tough position to be in, right? Which is why I've always been saying for the past month or so now, don't get complacent when the trade is easy. And the easier trade was when volatility across the 12-hour and the daily were both blue. And then when the daily flipped long, that was another big trigger, right? This was a week ago, right? And then this weekend, the 2-day flip long, right? You can see 3.5 days ago, 2-day flip long. And since that call, 10% up, right? Since the daily call, you're up 20%. Okay, so now here's the thing. You may have missed your trade. That doesn't mean you need to FOMO into a position right now, especially if you're unwilling to manage it on the lower time frames, right? Whether you're unwilling or incapable of doing so because you are busy. I'm here to tell you that that's completely fine. And that's very, very likely that we see another opportunity. All right, let's go back on over to our notes. Okay, I'm going to scroll down over here and I'm going to show you guys this little screenshot from one of our previous videos, right? This was I have the date right over here. Actually, we can see that this video was posted November 23rd. So we've been building the story, guys, since November, right? Since the end of November. And we talked about different pieces of the puzzle, right? We talked about the 4 stages of the mining cycle, right? And we said back then that we aren't in the rising bull phase yet, and we aren't in the inventory flush out stage yet that people were referring to as well. It's my opinion that we were in between the rising bull stage and the shakeout phase, right? That was all the way back in around late November, right? Leading into December. Now, however, we have entered the rising bull stage. But the rising bull stage does not mean one big pump. That's during the mining gold rush phase. We are not there yet, guys. And I didn't just come up with this out of thin air. We were looking at multiple charts, multiple pieces of the puzzle that formed our overall thesis, right? For example, the Bitcoin realized profit and loss ratio, right? Where we said that, hey, at the bottoms here, Bitcoin has usually started leading into the rising bull stage, but that does not mean that we're going into the bull run just yet, right? We need this to start tracking up. And if you go ahead and look at an updated version of the chart, this has started tracking up. We also talked about Bitcoin's hash rate, right? And we said, hey, this needs to start tracking down before we can start getting bullish again. And if you look at this actually did track down, but I believe it's on its way up over here. But we'll talk about this chart in a separate video. For now, in today's video, I want to focus on this chart, right? And I did a separate dedicated video, a 20-minute long video right over here focused on this Dixie chart and how it corresponded with Bitcoin liquidity cycles. There was certain signature that we had identified, and in that video I talked about how Bitcoin does not go just straight up like this, but instead, based on the type of cross you get a move that goes somewhat like this. Now I will be doing a quick update and overview of what we talked about in this video. I really recommend you guys watch this entire video, by the way. Go back and find it. The title of the video is BTC Bull Market Signal, Liquidity is Coming. It's a month ago, so you can scroll down through the channel and you will find it. Just enter these keywords over here. But before I give you guys an update on this video, I do want to give a shout out to Bean Eater over here, because he's one of the few people who has been keeping track of the bigger picture. He's not been getting tunnel visioned and letting the lower time frames get the better of him. He's been putting in the hard work, taking notes, and you can see it not by the message that he sent out in the Grove saying that, hey Sean, we're about to get the Dixie cross very, very soon, but also with the questions that he's been asking me in regards to various modules in the C program, right? You can see that he's like working on it, thinking about things and trying to improve. I received this PM from him December 30th, right? He's like, hey Sean, after a few trade setups that didn't play out, I enjoyed a 10% profit on shorting Avalanche, right? And a lot of new traders are very, very averse to putting on short trades. And by the way, Bean Eater is a new trader. He joined the C program only around 3 months ago, and he's already doing fantastic. And he's not rushed anything. He's taking it slow. I know he has, because his questions were coming in very systematically, very methodically as he was going through the C program, right? And he goes on to say, this is my first trade where I didn't get into analysis paralysis. So what does that imply? It implies that he has made mistakes before. He has gone into analysis paralysis before. And this time, however, he fixed that, right? So guys, the point over here is that nothing is going to come easy. There is going to be pain. There is going to be struggle, right? You will have to work not just on your technical analysis and your theory, but also on yourself. You're going to go through emotional and psychological battles. Today, you might be going through an emotional battle, guys. You may be feeling this strong urge to simply FOMO into Bitcoin's pump over here. But unless you planned to do so based on this price action, unless this was part of your plan, you cannot let your emotions dictate what you do. You have to stick with what was planned, right? So unless you pre-planned getting into Bitcoin based on this move, right, you cannot let your emotions get the better of you. Look at what he said right at the end over here. I profited and felt in control of my plan. That is so important, guys. That's so important. I personally would rather lose following my plan than profit by going willy-nilly and letting the emotions get the better of me. Because at the end of the year, my performance as a trader is not dictated by my outcome, but more so on how well I followed the plan. And here we are back on the charts. And what we're looking at over here, guys, is Bitcoin on the weekly time frame. And underneath is US dollar currency index, DXY, on the daily time frame. Okay, I'm going to go ahead and quickly explain what I did. What we are also looking at on the DXY is the green 55 exponential moving average and the purple 200 exponential moving average, right? And what I've done is I've gone ahead and placed a vertical line each time we've seen the green 55 cross underneath the 200 exponential moving average. I've then also marked out the same spot on the Bitcoin chart as well, right? So if you go ahead and put our panel down and focus only on the Bitcoin data, we can see that I've gone ahead and marked it out for the entirety of Bitcoin's price action leading all the way back from 2012. Now, in that analysis, we noticed something really interesting when pertaining to the crosses. Usually, we get two crosses, right? The first cross is the initial pump, and then you get the second cross that leads to the parabolic run that leads to the cycle top, right? It happened in 2012, where we got our first cross, and then the second cross came only 1 year later, that led to the parabolic run. Then it happened in 2016, where we got our first cross, where we got our run into the halving, then pull back, and then the second cross came in 2017, and we got our parabolic run. Well, what happened the following cycle? Got our first cross right over here, which had our run from 6,000 to around 10,400, got the pullback, the COVID dump, then you got our second cross only at around $10,000 to $9,000 and got a parabolic run leading to 60K. Okay, now this was only one piece of the puzzle, guys. If you combine this with what we were talking about with our Fibonacci's and our Ichimoku, you are seeing how all of this lines up. Now, if I zoom back into our DXY chart right over here, we can see that we are about to get the death cross. But this is only the first death cross, guys, okay? Remember, the first death cross is likely going to be a fake cross. And what do I mean by a fake cross? Well, I'm referring to when we actually see the cross, right? And then immediately the cross uncrosses itself, right? Where we get a golden cross again. This is indicative of a consolidation pattern, right? But the market still reacts to the cross, right? We will get a pump is what I said, right? And if you guys do remember, back then in that video, we had initially had our vertical line marked out somewhere around here. And we said that, hey, if DXY keeps behaving the way it is, we are likely going to have the cross happen towards the end of Jan. What do you know? It's actually happening exactly around the end of Jan. We're already Jan 16th, right? So let's see, we're going to get this in a couple more days. The DXY cross is likely going to confirm. So the markets, guys, react to the DXY cross, and that's what we're seeing at the moment, right? This bear cross is a sign of improving liquidity conditions, which is why we are seeing equity markets as well as Bitcoin rally, right? It's one of the reasons, right? Remember, there's a bigger puzzle. All pieces of the puzzle are coming together for the bigger picture. But remember, what do we say if it's a fake cross? We said that it's likely going to be a run, yes, but a run into a pullback, and that pullback is eventually going to be followed with the real death cross. And the real death cross, guys, is a trending death cross where Dixie has a sustained move down, kind of like how we saw over here, right? During this period, Bitcoin ran from around $10,000 all the way to $60,000. And then we had the golden cross, right over here. And the golden cross is a sign of decreasing liquidity conditions, right? Because the dollar is getting harder and harder. That makes it more and more difficult for entities to pay back their debt, less liquidity. However, guys, the first death cross, the first re-death cross after a prolonged trend is usually a fake cross. And I want to repeat, the fake cross usually leads to a pump that is not as powerful as the real death cross. It's not the parabolic pump is what I'm trying to say. So what is the point of all of this? What exactly am I trying to say? What I'm trying to say, guys, is that you may feel like this is going to be the pump that takes us to new all-time highs, to $200,000, to $500,000, but don't let your emotions get the better of you. If you missed the previous videos, if you missed your entry, if you're only just joining the Mango community, let me tell you that there will be better opportunities, and you have to be price agnostic, okay? Better opportunities does not entail a better price. Those are two different things, guys. And that's something you need to learn as an investor and as a trader. You may end up buying at a higher price, but things may actually be a lot more de-risked at a higher price, right? So I'll talk about that in further detail in the next videos. We're already hitting the 20-minute mark on this video, and we've talked about many different things today. Now, for the rest of this week, I'm going to start diving into more detail into certain signatures that I do want to revisit with you guys. If you guys have been enjoying this video, please let me know in the comments down below. Hit the like, hit the subscribe. I'll see you guys in the next one. Ciao.